Welcome to Markets Now. I'm Michelle Work with Vince Boddicker, Farmers Trading Company. Mixed closes in both grain and livestock futures trade today. And Vince, let's kind of break this down. First of all, corn and soybeans a little bit lower in the case of the corn market today. Corn has had a couple of decent up days. So did we just get stopped out up at chart resistance, or did we get dragged down by the soybean market?
I think you give soybeans were a lot of it. We can separate ourselves in there, but wheat was choppy in there, also ended up on the plus side. But I think corn took a couple-day rally in here, and it was nice to see Tuesday we could take out Monday's highs, but somewhere in this 409 to 411, 412 area in December corn. You probably need more news or different news than you have right now to think you're going to get through those areas.
And then in the case of both corn and soybeans, obviously we've got pretty strong crop ratings for this time of year, don't we?
We do. Corn came in on Monday as expected, down 1%, and the beans up 1%. I think it was a surprise that's a 2% swing, so you probably got some people that bought on Monday, decided to sell or get out of longs, whatever the case was. But I don't think there's any indication that we're going to run away. That early rally that we had on Tuesday in the beans, where you got in the plus side, I think are right at it, was led by the meal market that was 3 to 4 higher, that started to sink mid-morning and ended up about $8 lower.
Yeah, and again, we ran up probably into some chart resistance in the beans too, from a technical standpoint.
In the beans, you did, Michelle. Last week, I think it was, or the week before, when we rallied, we came up to that 1042, 1043, and then failed miserably, and you came up to the same area and stopped. The other thing on the soybeans that I didn't catch till later in the day yesterday, there was rumors that China was in to buy another 6 to 9 cargoes of new crop beans. And if we didn't hear any more about that today, that might have been part of the sell-off in there also.
Gotcha. I had heard that same story about China, but I've heard it several days in a row here now. So you're saying the lack of confirmation of Chinese business probably hurt the soybean market today. Do you expect that they are going to be a buyer here of new crop beans?
Well, last week you had to be impressed. Later in the week, we had a couple of days where they did. The real question is, what do they need? How much do they need? I would guess they're going to do everything they can to buy from South America and not the U.S. They're probably going to come back and do some token things here just to keep the door open.
So do you think that money flow had any effect today?
I think there was a lot of talk on Monday of money coming from the stock market into the commodities. I think we need more news and a bigger reason for them than that before they're going to come into the commodities. They may pull the money out and park it, but I don't think they're going to be really coming into the commodities until they get a better story.
When we talk about both corn and soybeans, obviously we've got a report coming up on Monday on the 12th of August. And certainly there's some bearish expectations that we're going to be looking at too, aren't we?
Yes, I think there's several states that they're believing could get record soybean and corn yields, which doesn't help. They've changed their route, and they're probably going to do some adjustment on planted acres. Maybe they do it on harvested acres too. We'll see how that all shakes out in there. But I wouldn't think there's anything real bullish in that report.
And we managed to end higher despite the fact that we had a stronger dollar today. Was that just technical? Was that money flow and short covering?
It's probably technical somewhat. I think it was also on higher wheat offers from Russia the last couple of days. Wheat, much like corn, did run into our 20-day moving average in the Kansas City market on Tuesday, which I think stopped it. You need more news, I think, to get you through those important moving averages. If we do, maybe there's more to go. And you are getting to that time of year, even starting in July already. You should have started to see some spreading of wheat and corn, buying wheat and selling corn, but you really have not seen much of that yet.
So cattle market coming off of 3 days of tough down move. So let's talk about the cattle market today. Live cattle, at least ending mix, trying to consolidate here with the stock market stabilizing. Do you think we can recover more in the live cattle futures if the stock market stays stable?
I think we can. You get the world gets to become fairly fickle anymore. You jump on news and you sell or buy just because you hear something, and then you analyze it later. I find it amazing that in the cattle side of thing, demand isn't going to pick up when the stock market puts new all-time highs in, but it's going to lose demand when the stock market goes down. We're going to lose some of that, but I still think there's the vast majority of the people that are going to be buying beef don't live off the stock market. And I think you have to get that psychology in there, and you got fears going. We actually looked for a break similar to this in the cattle market over the last few weeks, thought it would come just because of the increased weights in the fed cattle. In feeder cattle were probably overpriced compared to the fats, so they took it harder in here, but somewhere in these general areas of that mid 230s in the feeders, I think we should start to find some pretty good support. It's going to take a few days, as we noted, to get buying going, but I think we'll come back to it.
Today, though, feeders making more new lows for the move, and we have really beat up the charts there, haven't we?
You have. If you look at that November run back, they really look ugly with new contract lows starting last Friday, getting into the August and in October and September. It really wasn't until yesterday that we did that. In some of those, you put, I think in October, you put new lows in yesterday by 60 or cents or so, and today it was by 40. So you're finding some buyers as you get down to those levels, and I think that's what it's going to take to get us to come out of here, but it's probably going to take a little bit to get that confidence built.
Yeah, so true. And the hog market almost felt like the last couple of days it was following the cattle market, but closed a bit higher today on its own. And the cash market cutout values have actually been holding together pretty decently here for this time of year. Is that kind of what's holding things together here?
I think, we look at pork supply or pork production, I think in so far this year is up 5 to 6% from last year, which was anticipated to be up a bit, but not that much. You had the ham market that took a huge rally in July. It rallied 50 cents, I think, to 159, and you rallied 75 cents since Memorial Day. And you got to look at Mexico as being our biggest buyer, and you wonder if that doesn't cut it off. And I think the trade looks at that. When you saw some news reports yesterday, hams had went from 120 to 101. So that maybe brings us back to where we were in early July, and maybe that hopefully that brings back that Mexican market, which we really need to get rid of that extra pork we have.
Okay. Thanks for joining us. Vince Boddicker with Farmers Trading Company. That is Markets Now.